Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody. Welcome to the podcast. I'm so excited for today. We've got Richard Turrin on, who is my go-to expert for everything China and fintech and digital currency. He's a best-selling author of two awesome books. The first one's called Cashless, China's Digital Currency Revolution. And the second one is Innovation Lab Excellence, which if you're running a bank, you got to read that one. And so with that, let me welcome Richard to the show.
Hi, Lex. Thank you so much for having me. It's an absolute pleasure to be here, and can't wait to talk to you about China and central bank digital currency, my favorite topic.
Yeah, we're gonna get into it. And I think, I want to cover today where China has gotten to in terms of fintech and blockchain and dispel some of the myths and, assumptions that people bring to the conversation. I think we'll talk about and financial and how that's made society cashless. We'll talk about the CBDC and how that's becoming really important. But before we get there, I'd love to just open up your personal experience of, how you got to China, how you began to build your career there, and then what kind of work, you've done along the way.
Sure, talking about me is, I guess, everybody's favorite topic, right? Look, it's easy. I've been here for 11 years, and I got here in 2010. Which for anybody who lives anywhere else, 10 or 11 years means the place that you live looks somewhat like the place that you lived in 10 or 11 years ago. But if you live in China, it's like 5 generations anywhere else. It's incomprehensible how much the place has changed in 11 years. But I got here following the 2008 financial crisis. I worked in the intersection of mathematics and finance, working in structured finance for, I don't know, I guess 18 years. I headed teams on trading floors and I was a mathematician by trade. My career and my entire discipline disappeared after the financial crisis for good reason, although I have to say I never touched a mortgage-backed product in my entire career. So that's the good news. But I came to China because, frankly, the world that I had known post 2008 blew up and went away. And I came here with 2 duffel bags and started a new career. And I eventually became a professor at Hult International School of Business, where I taught math. No surprise there, and applied finance at the MBA program. And eventually, I went to work for IBM, where I spent 4.75 years, eventually spending a little bit of time down in Singapore with them as well. So the thread that binds it all together is math and tech. Basically, what can you do with math? How can you make math become something through a computer? And how can you turn that into a financial product? And that's essentially what most fintech is, whether you've thought of it that way or not, I don't know. But that's the name of the game. So that's how I got here. That's what I used to do, and that's still where my writing and where I'm going with my books.
And so I think this is a really interesting thread, and I guess the catchphrase is weapons of math destruction, but we're so far on the other side of that where all finance and really much of the economy is math and software, So whereas maybe prior to the financial crisis, it was how do you structure derivatives or how do you quantify risk for a particular financial decision or distribution decision. These days, everything runs on that software, whether it's the financial instrument that you create or whether it's how you deliver that instrument to people or whether it's the QR code, which is encrypted, or, the place where we're all going sort of towards blockchain and Web3, where digital assets and digital objects are rendered and secured by that mathematics. What has it been like for you to see that shift, from math and software being a function of finance for a particular purpose towards becoming literally the water in which everything swims.
That's a beautiful observation, and I think I can best explain it through a story. When I started my career out in the early 90s, we were building very specialized solutions for individual companies, individual investors. So I could put a mathematical solution together, have coding team code it up, and we could even deliver it on a desktop for an individual user via Java apps. Okay. So some of the early stuff I worked on was risk management. How do you manage risks? And so that's how I started my career. And one of the neat things we built was for a big Mexican client. We built sort of a dashboard with fuel tank green gas gauges and things, that showed whether the risks were high or low. What was funny is that kind of software came back to me later in my career at IBM. IBM had bought a company called Algorithmics, and many years had gone by, but the mathematics that was once rolled out for an individual client, now through IBM, through cloud, through many, many years in between, we were now able to roll it out to every trading station in China. And, it's this concept that you could do it for one back in 1992, but by the time 2017, 18 came around, okay, you want this on a million desktops? No problem. And by the way, it's the same underlying math and software. It's just that it had been modified and smoothed and commoditized, made into an easy product. So yeah, that's my life. And believe it or not, much of what we developed on trading floors for portfolio analysis is really the backbone of robo advisors today. So, when you're clicking on Betterment, one of the robotic advisors, that portfolio built by the same math that guys like me and much smarter people than me made back in the early 90s.
What is it? The good artist borrow, best great artist steal, something of that nature. I guess that's where we've landed. Okay, so if we
Yeah, that's so true. I love it.
it's not mine. I'll disclaim it. I just steal it. So if we shift to China, I mean, this it's a story that's so hard to read about and get texture of the lived experience that people have. And I think one of the things that you bring to the conversation is just being able to embody and translate what it's been like to be on the ground and seeing the society transform, and I think people just have these kind of cliches about China that they bring to the conversation, whether it's the developing world and the unbanked and the manufacturing and like no access to credit and these slow banks. And I think this assumption or these feelings about this global superpower, they're not necessarily informed by reality. So can you walk us a little bit through what it's been like to spend these 11 years being in the society, and where did it start? Maybe what were your observations when you started, and how has that evolved over time?
Yeah, well, simple. It starts out, you land here, you get off an airplane, and you can't talk to anybody, and it's very hard to interact with society. So that part is the first shocker. And I did speak some Mandarin, very little, but after 11 years, it's a lot better. So yeah, it's this culture shock that you undergo when you first get here, and that gradually goes away. It becomes comfortable, but after 11 years, you get to see what is different. So, okay, so ready? It's like operating systems and computers, right? There's different versions of software, and you can see version differences. But then if you go at a deeper level to the BIOS, or there's deeper subcode. And so what you see after 11 years is how different the operating system is for editions. Okay, fine. China has this. When I got to China in 2010 or 11, I thought, and this is going to be funny, I thought that China's online banking systems were way behind those in the United States, and they objectively were in 2010. And now I laugh because my online banking in China is so much more advanced than what's possible to do in the US that I laugh. But that's another issue. So, what I get out of it is a profound appreciation for cultural differences between the US and China. And after 11 years, they become rather clear.
What are those cultural differences? How would you frame them?
Lots. So the answer is it's a really big topic. So let's narrow it only to say cultural differences within the digital space. Only because what you eat is not relevant. And there's a big difference there, how people do food. So on the digital side, there's a huge cultural difference. Whereas in China, the culture surrounding digital was a culture of modernization, a culture of being up and coming, a culture that surrounded digital with new money and aspirational lifestyle. So some of that might be true for the US, but what you see in China is a willingness to accept and try new digital solutions. Because digital solutions are aspirational, digital solutions are considered the path to more money, a better life, and to more of something. And, so you've got this deep ingrained cultural difference. The only thing I can compare it with, if this makes any sense, and it's because I'm older and I grew up in the United States, was the space race. And, during the space race, if there was an advert that said that this washing powder would make your clothes more white, you believed it because science and technology was zooming ahead and they wouldn't lie to me. Of course, it's going to make my clothes more white. And that's sort of what digital is to China today. We've got a new digital product. It'll make your life better. Why wouldn't I try it? Of course. So, yeah, very different on how people relate to the digital world here.
Yeah, I think in the States you have a couple of narratives. Silicon Valley was a huge attractor, but I think in a number of ways the story of Silicon Valley has gotten twisted through the story of politics and of the stories of, like the elites are doing this to me and making me sign up for this type of thing or this type of thing. And I think that's twisted the perception of technology and solutions from tech companies. I think there's also another twisting in terms of how much faith people put into solutions from venture-backed companies now, given the experience with Uber and WeWork and the large tech firms driven by ad revenue. And so I think it's a very complicated framing that's really splintered across party lines. And I'd say, we'll get to this, but the frontier has moved to the global frontier of crypto assets. But before we get there, I wanted to.
Yeah, yeah, but I want to interject there and say regarding Uber, and I think Uber is the classic example. Uber was an aspirational app or service. It gave birth one of the early gig economy plays, and people who were Uber drivers had tremendous faith that they could do more or make more or be able to use their spare time more efficiently through the app. And then through years of algorithm refinement and reduction of Uber driver payment, none of the Uber drivers sing loving praise of the Uber system these days. It's complained about more than it's praised. I think there's the sense that the digital economy, the gig economy through Uber at least didn't work as advertised.
That's likely a nice way to put it.
Yeah, I tried. That's why I'm pausing. I'm trying to be nice.
So the two stories sort of for financials investors about China and fintech, traditional fintech or circumscribed fintech are, in my mind, number one, payments, and then number two, e-commerce. So over the last decade, China has become the highest adoption of e-commerce relative to traditional commerce probably in the world, maybe something like 3 times the percentage in the United States. And then similarly for the payment rails, the success of Ant Financial and Tencent and others similarly is something like 2 to 3x the percent share of digital and proximity payments than in the United States. And these themes are much more bolted on together, it seems to me, the e-commerce and digital payments, than in the US where it's swipe a card or do some NFC payment. Can you talk a little bit about what it was like to see the digital payments become adopted? What were the reasons for how it grew, and what has it felt like to see that change in society?
Breathtaking. I was privileged to be here to watch it change. So, just to solidify your stats, because this is the kind of stuff that I know off the top of my head. E-commerce in China represents 52% of all retail commerce in China, whereas in the United States, e-commerce represents 15% of all commerce. China mobile payment market, 52 trillion, more than 3 times the GDP of the country. And to compare it, The US card market in all of its entirety is 7 trillion and China's mobile market is 52 trillion. So, these are big. So, what does it mean for China? What was it like to be here? Really simple. Big tech, everybody asks this question in the West. Well, what happens if big tech went into banking? What happens if tech went into payment? This easy answer to that. Just look what happened in China. Alipay, which was part of the Alibaba group at the time, and WeChat Pay, which is part of Tencent. Tencent is the rough equivalent of a Facebook or a Twitter. And Alibaba, of course, is an equivalent of Amazon. Both of them got banking licenses. Both of them went into the payment business and they disrupted and transformed payment in China. What did it mean for people? Very simple. Give you a story because this is the reality. I mean, when I rented some of my early apartments and I had to give a security deposit, I literally went to the bank with a backpack and got bricks of money out. The largest banknote in China is 100 RMB. It's worth around $15, $16. So if you have a couple of thousand US in rent security to pay, you actually end up with a brick of money. So literally, people were passing bricks of money around in 2010 and 11 when I got here. And of course, now everything is done electronically. No need for the brick. So when I got here, my typical bank branch, I would go there for foreign exchange or some other stuff that I had to do. And, I'd wait in line an hour. And now I go to the bank and there's nobody in line. There's nobody, there's fewer tellers. The banks have closed many branches. And the only people that are in the bank branch with me have gray hair. So, because they're old and they don't know how to work digital payments. So, yeah, it was a shocking thing to live through.
So just a naive question, like what is a digital payment? Like how does one actually use Alipay instead of taking a brick out of a bag and putting it into a counting machine? What is the physical thing that you do? How does it work?
Sure, real easy. For anybody who's never seen or looked at Alipay or WeChat Pay, it's very simple. You open the app, and if it's WeChat looks almost exactly like WhatsApp. And then you go to a little button, you push pay. And if you want to pay someone at a cash register, because you're going to buy your groceries, a QR code pops up, and the person on the other side with the cash register has a little camera reader, and they simply bang, beep, read the QR code, and you've paid. That's it. The other way you can also use it is to, of course, receive payment. So I go to the same app. Instead of saying I want to pay, I put I want to receive, and a little QR code pops up. It's a different color, and somebody can scan that and pay me. So I can make payment or receive payment all via QR codes, all with social distancing. I can, stay away from people. It works very, very well. It's fast, it's clean, it's easy. It's so well done that Facebook used it for Facebook Pay and Square has used it for its new payment apps. So you're seeing a migration of QR codes into the West. So if you see a QR code for payment somewhere, thank China, because that's really where it got its start.
Yeah, and that social behavior is definitely popping up in London and Europe, and I think slowly but surely we'll reformat the US as well. I've got two kind of sideways questions based on your description. Take them as you want. So the first one is that it looks like WhatsApp, and Facebook has desperately been wanting, because Facebook has maxed out really its attention play, and it's been desperately looking for its next leg of growth, and pushing into finance was seen at least a couple of years ago pretty widely as the next leg of growth for Facebook. Of course, they can't really do that in the US because they're not well liked by the government. So they've pushed into Brazil and into India, and Southeast Asia, and into all sorts of geographies where maybe the powers that be can't bind them as much. But it hasn't really worked, and Google's push into banking and payments also hasn't been received as well as you would expect. It hasn't had this like blowout society-wide adoption the way that Tencent and the rest in China have succeeded. Any thought on why that's the outcome right now?
Yeah, because both Google and Facebook are playing with their hands tied behind their backs because obviously they have to obey the local US laws, and the local US laws don't allow them to really do much by way of payment or banking. So the best that Google could come up with was to actually do the analytics and provide the interfaces for the checking accounts. I can't remember the name of the Google Plex accounts. So Google Plex, which they've dialed back as of about a month ago. Google said, okay, well, we can't be a bank. We'll at least try to help banks provide the feature. So that didn't work out very well. Facebook is really interesting because anybody wondering why Facebook is building the DM coin, pushing the Novi wallet, which I just downloaded today out of curiosity, they're following WeChat's model. It's not a big deal for Facebook to invest long term in the DM coin project or the Novi wallet because they know that the business model that WeChat has with combined social plus payment is on fire. So Facebook, whom I normally don't give much credit to, I must give credit to for being persistent in trying to make a coin and trying to make a digital asset that you can transfer. Not because they're nice guys, but they know that if they crack it, they'll be tremendously wealthy.
Poor Facebook. It's so hard to be worth trillions of dollars. Okay, so if we look at the success of, and it's closely tied to the success of Alibaba and the rise of digital commerce, but recently there's been quite a bit of regulatory pushback, and regulation in China looks quite different from regulation in the US. And you've talked about the approach that the party takes being quite different from the sort of unfocused approach that the US takes. Can you talk a little bit about what's happened with Ant's IPO, with Alibaba's market power, and then more generally fintech in China, and why has the government been restricting and forcing the industry to kind of reformat, and kind of like where's it all going? Why is that happening?
Yeah, big question. So let's answer the easy part. Where is it all going? Okay, where it's not going is it's not going to nationalization. China isn't coming in to nationalize Ant. It's not destroying Ant. It's not otherwise trying to quasi nationalize these organizations. Okay, Ant, which is the parent company of Alipay. The company basically gave birth to modern fintech as we know it. There is nothing that they haven't done that isn't copied somewhere because they had the idea first because they were a payment platform. So God bless them for that. But what they were able to do is to conquer both payments, personal loans, make a big dent in digital insurance, huge presence in asset management through one of its subsidiaries, which became for a while the largest money market firm in the world. So what they were allowed to do by virtue of their size, they were a big tech platform equivalent with Amazon when they started. So they had great reach. What they were able to do is to be very, very successful and get very, very big. And that for anyone in the West is good. No argument about it. It's good. I give them a lot of credit. They're a great company. On the other hand, they did this in a very light regulatory environment, which most people would say is also good. And I would agree with that. They did that in what I call regulation light environment until their scale became sort of fully revealed with the IPO. Okay, so how big is Ant? Well, Ant has more than half of the payment market in all of China for mobile payments, and as we said before, that's 52 trillion. So they got more than half of that. How much do they have in loans? Well, they at one point they had somewhere around 12% of all the personal loans in the country. I don't know the number, but it's big. Okay, and then you get into asset management and other things. And each one of these was a sector that was very, very large. And then you get to the IPO and you say, okay, we're going to put a number on it. How much is it worth? Well, Ant originally went for an IPO of 200 billion with a asterisk. They said we might do 220. By the time Ant actually came within a week or so of its IPO, the valuations were hitting 320. So $100 billion more than where they started. There were a couple of big reveals during the IPO process that I don't think even the regulators understood. There's a sense in the West that the regulators understand everything. China rules with an iron fist. They have to understand. In fact, the regulators are less organized than you think, and they didn't understand a lot. And I think there was a realization with the IPO, and the realization was this: in order for Ant to justify the valuations at 280, 300 that were coming out, the only way that Ant could possibly make these valuations would be to flood the China market with loans, because loans were its primary source of revenue. It made money in all the other areas, it's all good, but loans were really where the heart of the money was coming from. So my take is that the regulator got spooked and basically looked at this and said there is no way that we are going to allow this kind of new capital to be used to drive more indebtedness within the China market. There are many who say that, well, it happened because Jack Ma gave a speech and Jack Ma got everybody very upset with the speech, and that's why they canceled it. And my take is Jack Ma is the most connected guy in China. Why on earth would he deliver a speech before an IPO that would antagonize his regulators? He's a pretty sharp guy. The only reason, in my view, that he's going to give a speech that antagonizes regulators is if he was pleading with them to not shut him down because he knew it was happening already. But that's neither here nor there. The real issue about Ant is one of prudent regulation. And this is what you see signaled by the PBOC now. So Ant has been reorganized. It's got a financial holding company now. It's got a new credit division. Everything is in new boxes, and the boxes are compliant with existing bank and loan regulations. And you can argue whether that's a good thing or a bad thing. It'll hurt their return on capital. They will still be tremendously creative, as a couple of new products from this week show. But what the government is fundamentally saying is, look, we are not willing to let 12% of our personal loan book go unreserved. Ant held 2% reserves on all its loans. And they fundamentally said, look, we appreciate what you do. PBOC has repeatedly said Ant has been net positive for China, good company, but that it could not continue to operate completely outside of regulatory boundaries. And that's really what the upshot is.
Gotcha. I think that's a really enlightening take because, at least for a lot of institutional investors, there's a debt story about China, and both externally kind of a concern around increasing debt levels, as well as I think internally always process to get rid of fraudulent or poor quality lending that puts people into bad financial situations. And so with the digital lending P2P platforms around 2015, 2016, this was a huge theme, right? Of the government trying to shut down, let's say, opportunist versions of Lending Club. Is that right? Is that a fair assessment?
Absolutely. And in fact, look, I'm glad you brought it up, like, because I swear I was just kicking myself as I closed the question before. I said, oh, damn, I forgot to mention P2P. Okay, so look, let's dive into P2P lending real quickly. P2P lending, all told, when the dust settled, cost China $120 billion, much of it from small investors. P2P lending, the crisis didn't end until 2020 because they're still trying to figure out who owed what to whom. But the real investment boom ended in 2017. So you're really looking at, in 2017, the PBOC, People's Bank of China, was cleaning up a major mess. There's beyond belief. Social unrest, people jumping out of buildings, people losing their life savings. And this was just being cleaned up. And at the same time, Ant is coming to market and saying, hey, we've got an IPO and we have a tremendously large loan portfolio. I honestly don't think the PBOC knew the full extent of their loans until it was actually laid out for them in the IPO reports. And you say, well, how can that happen? Easy, because China has states, just like the US has states, and these states have independent regulators, and not all the figures are aggregated at a national level that efficiently. It's crazy, it's just the way it is. But people in the West have to understand what a disaster P2P loans were and how the notional values of loans, it was really funny. If you looked at the numbers, there were a lot of cognates as to the value of loans in the market and the number of people who had taken the loans that made Ant and WeChat, both in the same business, both of them basically if you were a regulator, you would have said to yourself, "Oh my God, this is a repeat performance of P2P. We just saw that. We just saw these levels of indebtedness. This is a bubble. It's going to break. Please, God, we can't let this happen again." And, and you can't blame. I mean, it's not even like a decade. It's like 3 years. It's all the same regulators. That were cleaning it up.
Right. Yeah, it's the post-traumatic stress disorder of just fixing something and seeing a much larger version of it coming down the pike. We this has been fascinating, so I wanted to go deeper on it, but I also want to touch on the topics in your most recent book and the emergence in China of a central bank digital currency. And I mean, it's emergence is the wrong word because there are wallets out in the wild. There's over 100 million of volume, as I understand it, if not more, of being already transacted in the central bank digital currency, while Europe and the US are still kind of doing first pass at research on whether crypto is good or bad for its monetary policy. Can you talk a little bit about this shift and just the perception of what CBDC means for China, and then like what are the things that you're seeing emerge?
Sure. So let's kill up front, in the very, very beginning, let's kill two misperceptions. Ready? Misperception number one: People's Bank of China is launching its central bank digital currency in order to kill Alipay and WeChat Pay. Demonstrably untrue. It is important to understand that the PBOC started its digital currency project back in 2014. That's when and WeChat launched. Neither one of these payment services was a smash hit in 2014. Yes, they were successful when they launched, but nobody could dream. The companies WeChat and Alipay and the PBOC, no one could really thought when they launched in 2014 that they were going to make China go cashless in about 4 years. They were smash hits. But the point is, the CBDC has been underway since the formation of the Digital Currency Research Institute, which is part of the PBOC, and that goes all the way back to 2014. So the people's view is that, oh, WeChat and Alipay were too successful, so they then made the digital currency to put them out of their misery and spite. No, digital currency was already in the cards back in 2014 for the PBOC. They saw and continue to see digital as the solution to many problems that you have when you have 1.4 billion inhabitants. Digital is the only solution that's viable for many things. So that's number one. Now, the second one that I'm going to handle is ready, and this is a little bit tangential, but I just want to make sure that people get this. Ready? How many news articles have you read that say this? China is banning Bitcoin and cryptocurrency because of the central bank digital currency. Now, work with me here for a second, folks. Think about this for a moment. China, since 1949, has allowed no other currencies within its borders. Like it or not, that's just China. That's what they've done, right? So no one in China, except for one video of a coffee shop up in Beijing, no one has ever been allowed to make a retail purchase with Bitcoin ever. It's not new. Even before the ban, you could own Bitcoin, you could trade Bitcoin, whatever, but you couldn't buy stuff from a retail store. CBDC has one purpose: retail payment. So by banning Bitcoin, how much do they improve the market for central bank digital currency? How about not at all? So the concept that China is banning Bitcoin to somehow make it a better market for their central bank digital currency, which is predominantly used for retail payment, has no sense whatsoever. So there we go. So those are two common misconceptions that I really wanted to get out of the way. So now I think I can answer your question, Lex, which is,
Yeah, I think they're just very easy flags to wave. It's easy to put those Lego pieces together, even if they're from different sets and actually don't go together at all.
yeah, and I laugh because the second one about Bitcoin and the digital yuan, I read it literally every day, and I laugh because I'm trying to understand. Wow, there must have been a lot of people using Bitcoin behind my back at these coffee shops that I never saw in the last 11 years because, it was never legal for retail payment of any form. So the question is, what about central bank digital currency? What about the US? Big picture stuff. Ready? In short, number one, the US and central bank digital currency. We have now had 3 delays on the MIT report. The Fed organized the MIT something lab, I can't remember, to do a special report for the Fed on CBDC. It was first going to come out in June or July. It was then going to come out in August. It was then scheduled for September launch. It was then scheduled for last week. We don't know when this is coming out, but it keeps on getting delayed. And I think that's a harbinger of the Fed's CBDC project, which is it will be late and delayed and many years behind. Now, what do you need to know and what is important about China's central bank digital currency? Key point, if you remember nothing else, is that China's central bank digital currency is designed to bring digital payment far deeper into society than WeChat Pay and Alipay were ever designed to go. Now, let me just make one more quick statement on that. I'm not going to I don't want to overload you. Today, when you use Alipay and WeChat Pay, you use it to pay for stuff. But if you're working for a big company, you don't get salary paid by Alipay or through Alipay systems. You don't buy small investments. Yes, you buy on the Alipay system, but you don't make large cash transfers on Alipay. So what we see with the central bank digital currency is an attempt to say, hey, Alipay and WeChat Pay, we love what you did. You brought digitization to China at an unprecedented level. Let us take it from here. We're going to go even deeper. And you already see salaries being paid in digital currency for JD.com. It's an experiment, but salaries are paid. And you saw transfers now over $1 million from one large company to a commodities warehouse. So you're going to see digital payment make it be much more deeply ingrained into society and go far beyond Alipay and WeChat Pay ever did. And ready for it? Furthering the gap between digital China and digital US. And that's where it's going to go.
I think it's super interesting in part because if we look at China as kind of a harbinger of digital adoption, meaning that the behaviors people are choosing there or are being adopted by industry end up spreading through the rest of the world, it's almost a sneak peek into what the West maybe will look 5 to 10 years from now, right? Which is that you do have a digital currency that is issued from a central bank that flows through all the types of systems that we expect, whether it's the finance function inside of businesses, whether it's the treasury functions, whether it's the payments for commerce functions. And we see this kind of at the edges with Visa and MasterCard trying to plug in open crypto networks into their network of networks. But it's quite something else in China because you do have almost, in some ways, you have a blank slate to roll this out and innovate. What are the types of things that you're watching to see whether these pilots are successful or not? Like, how can we tell whether this is, just a hallucination, just a sort of sci-fi future, or whether this is something that people are actually using and adopting?
Okay, so first thing, I loved your concept that China is a harbinger for our future. That's the fundamental theme that I talk about in my book, Cashless. I basically say, look, if you want to know what's going to happen with digital money, look to China. It already happened there. And when I say digital money, I don't mean crypto, but I mean how people relate to money. And that's the fundamental thing. Once money, as you know it, goes completely digital, it changes at a fundamental level your relationship with cash. And that's the hard part. So when I talk about WeChat or Alipay and I say digital payment, most people can't think beyond a swipe of a credit card or the tap of a card. That's payment to them. They can't imagine a digital platform. They can't imagine the world of services available when money becomes digital and is transferred for free and immediately and easily. It's like a gulf in understanding and comprehension that has to be spanned. So it is a harbinger of the future. It is a blank slate. And so the question is, will it work? And the answer is, of course. It's China. And, the reason is the first thing I told you was that the culture loved digital everything. They're going to love digital RMB because they understand that it is data efficient. It takes you off a corporate platform. And this is the same thing when we talk about corporate stable coins. I say, oh, hey, look, corporate stable coins have a fundamental problem in that they are attached to a corporation which seeks to make profit in various ways. So in China, we have the WeChat and Alipay networks, and I love them dearly, but they are hoovering up, sucking up data, and that's what they do. So there'll be certain people who will use it because of certain people who will use digital RMB because of the data features. And there'll be a lot of people who will use digital RMB simply because they're going to get paid in digital. So imagine this for a moment. Right now, most people get paid just like you probably do. You go to work and you sign up for direct deposit, and they make a fiat deposit directly into your bank. And that's exactly what happens in China. But then, because we're in China, everybody sucks the money out of your bank account and they put it into WeChat and Alipay and they spend it digitally. So just imagine you're going around a circle. So you go from fiat at the work, placed in your bank, fiat again, and then, well, it's all fiat, I guess. Poor choice of terms. Money goes from your bank, from the work bank to your personal bank, to your digital wallet, where it's on WeChat and Alipay network, and you spend essentially WeChat and Alipay dollars, digital dollars of a form. What's going to happen is we're going to change that around, and people are going to get paid in digital RMB. The money will then stay in that digital wallet or be pushed to the bank account, the money that you don't. So the money will be pushed to the digital wallet, spent on the digital wallet, and that money which is left over will be pushed to the bank account. So it's going to be a success, and I don't have any doubt about it because there will be so many companies, including state-owned entities, that are going to use it, that the chance of failure is very, very low.
Yeah, that's fantastic. And we could keep going, and we should, for an even deeper dive into these topics in the future. But for today, we're out of time, and I want to thank you for opening this up for us. If folks want to learn more about you, about your book, where should they go?
Sure. Please come visit me on LinkedIn or Twitter. I write daily on LinkedIn and daily on Twitter, and I talk about China and digital technology almost every day. So I'd love to hear from you. If you're listening in, just let me know that you saw me or listened to me, and say hello. Don't be shy.
What handle should we use?
I'm exceedingly boring with both. My Twitter handle is Richard Turrin. Nothing fancy there. And of course, LinkedIn doesn't have handles. So yeah, I'm Richard Turrin on both. My book, Cashless, covers many of the digital topics we talked about today. Cashless, China's Digital Currency Revolution, is available on Amazon. It is also available on Apple Books, of course, and a whole bunch of other digital platforms whose names I can never remember when I'm supposed to. But still, it's out there in digital form and in print version. Please check it out.
Richard, fantastic to have you. Thank you so much.
Thanks so much for having me, Lex. It's been absolutely a pleasure.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.